Good afternoon and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We'll be coming to you live from Crypto Evolved, hosted by Viable Markets. It's the first industry conference focusing on market structure for cryptocurrency. Joining me for this segment is James Geller, who's a senior analyst over at PitchBook. Thank you very much for joining us today. Let's focus on venture capital. This is not something you typically hear in cryptocurrency circles. So what does VC look like when investing for crypto?
Sure. So we've seen rapid kind of evolution in that space in the last few years. Last year was a record for deal making, so we saw about 180 deals for $1 billion. This year, we're not even at the halfway point yet, and we've already set a new record, so $1.8 billion invested, with a similar number of deals that we saw for all year last year. And usually these investments are in the equity layer of these crypto companies, so a little bit different than the tokens themselves. We're starting to see a little bit of evolution there to where people are doing kind of SaaS and token pre-sales through a VC fund, but given kind of the restrictions on the VC funds, they're capped at 20% in liquid assets, which tokens count under, and so there's definitely some kind of handcuffs on VCs as they're going into the space.
So how do VC investors evaluate crypto assets and whether or not they're viable investment targets?
Given that a lot of these crypto assets are white papers or ideas that are still very nascent, it kind of is akin to a seed stage investment for a lot of VCs, where they're going in really trying to evaluate the team and the total addressable market as opposed to actually looking for a viable product early on. And so that's even more so in the crypto space, where you're really basing it off of an idea and you don't have any sort of prototype. And so it really is kind of that kind of seed mindset that most VCs take.
Is it the same level of due diligence that you might do in a more traditional VC investment?
Absolutely. So the VCs that we see in this space, the most active investors do about 80 to 90% of their deals exclusively in crypto blockchain companies. And then besides that, it's really kind of the high caliber VCs that are even willing to wade in there. So your Andreessen Horowitz, your Sequoia Capital.
Right. All right, to wrap it up, some prominent VC investors have publicly declared crypto blockchain category as a scam. Mm-hmm. What's your take? Because looking around here, it doesn't look like it's a scam.
So I think, blanket statements like that really don't do anybody any good. And what we're seeing is a lot of people in the VC community are actually going out and starting their own funds, because there is kind of that skepticism from the institutional crowd, even within their own VC firms. And so we're seeing a lot of VCs kind of go out and launch their own funds to capitalize on this. So I wouldn't necessarily categorize it as a scam right now, but we're definitely seeing at least caution in the early stages. That's starting to change a little bit. Andreessen Horowitz just yesterday announced that they're launching a crypto fund. So I think they're probably the first mover there, and they'll kind of give the green light to some other VC firms to follow suit with kind of similar papers.
All right. Thank you very much for the insight, and thank you for joining me today. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.